The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. As we start off the day and we look at the S&P, it's up 4.5 points at 2002, 1.45 billion shares, which of course is very, very light. When we look at the NASDAQ, it's up 15 and continues to lead the market higher substantially, as we probably see a little bit of signs of some bubbles in some of these areas, and certainly going against the grain, as we've talked about for the last, 10 trading days or so. We got to the point where the market just didn't have any more energy, and we made a low. And, of course, the short squeeze into super light volume continues. This is not uncommon. It happens many times in the last few weeks of August. It used to happen almost like clockwork in the first 5 years of the 2000s, 6 years. It kind of got goofed up with the big downturn, 2007-8. And when you look at it, you can see that I think those standard currents or eddies in the market that happen for people going back to vacation are back. So you might want to be putting this on your calendar when it happens next year. But at this point, it looks to me like everybody's vacated the market. Just the B team is in, maybe the C team is in on Wall Street. And the one thing that they have out there is do not let this market go down. Don't let it go up too much either. But just let the shorts swing in the breeze on this very, very light volume and see whether they blink coming into Friday and a 3-day weekend, and probably gap the market up on Tuesday when we come back and see if we've got anybody out there that is willing to bite. See if any of those retail people come in. Volume is and does continue light. I suspect that they're going to try to hold this market up through expiration, or at least the first expiration in September. They may not get it that far, but certainly looks to me like there's a little bit more out there. I've got a couple of positions in the commodity markets in my daily newsletter. I had some small caps that I thought, especially going into this light volume, you would see short covering in them. Didn't really give me what I wanted. I got out of them. So longer term, I want to be in cash. Shorter term, I want to be in commodities. And, of course, a little bit of a counter move today in those commodities. Gold's up $5. I think I saw crude up, what was it up? So, crude's up 55 cents. So not a great deal happening up there. Of course, dollar index is up another 10 cents, which makes it tougher. Yeah, gold's up $6 for the December contract. But, we look at silver, up a penny and a half. No big deal. What do we have for copper? Copper's off a little bit, but this thing's been in this lower trading range from about 320 to, 295. Really hasn't gotten out of its way, but it probably at the upper range of copper at least. Of course, I guess tonight at 5 o'clock we'll have Andy Heck on. I saw Andy's new piece out on what is it? Alpha, whatever, that website. I can't remember, Alpha something or other. But a good article. Maybe he'll talk about that tonight. And something we've been talking about, which is at least deflation in a great deal of commodities. We've seen it in crude. Of course, with the current contract down to $93. Seems almost thinkable. A couple of months ago with crude at 105, 106, 107. It actually went one more time higher than it probably should have, and that's probably where a lot of the damage is coming in. on the charts, probably looking at crude at around $87. And I just think we're going to meander down in probably all these commodities a little bit lower, at least in the first month back out of the summer and into September, looking for that deflationary spiral in gold, crude, silver, copper, just about anything that is a commodity. And we shall see. Anyway, it is a beautiful day out here. Had a little extra time to go smell the daisies and turn the TV on and just see what the cable stations were doing. Of course, kind of interesting to see. I've been watching the ratings come back for most of the cable news stations, and was kind of surprised to see that CNN was doing so poorly. So I looked at them today, and of course, a totally made-up news story this morning trying to ferment racial hatred and basically kick a story that's dead now back into their agenda. And I guess all news outlets have at least some form of an agenda. Just kind of, I haven't watched CNN in a while. I haven't watched any of the cable stations. I try to get as much news as I can from the written word, and that's something you can think about. But when I do watch even CNBC or any of the others, I tend to watch it without the audio on. I turn on closed captioning. You get so much emotional baggage by listening to the folks trying to gin up anything. And of course, in the morning, it was CNN with a phony news story trying to get everybody in racial hatred going again for their own devices, ratings, social agenda, who knows. It was a bogus story, though, and it took me all of about 5 minutes to see that it was nothing but propaganda. And again, all of them do it. I just noticed it on that station this morning. It always reminded me of my first, when I was put on a grand jury when I was about 20, I think I was about 25. Somehow I got stuck in it because they found out I had Fridays off and they met on Fridays. And the prosecutor was trying to barbecue some cops to throw at the feet of a Jesse Jackson kind of Al Sharpton kind of weasel that was big in the community at that time. He's made his way up to congressman now. You might remember him over a couple of years ago, lied about people spitting on him. Unfortunately, there was video there, and it ended up proving that nobody spit on him, and he was just a liar. But we see all these agendas going on, and of course, my mind kind of drifted to what kind of agenda that the people at CNBC have, or Fox Business News, or Bloomberg have. Bloomberg probably the least agenda-driven. They tend to be kind of the favorites of the people on Wall Street to actually watch for the traders. And, of course, the people trying to manipulate news, CNBC, because it's what most people watch, especially the retail traders. But if you ever watch any of the political ads, they tend to put a video that they are replaying for the news issue or a replay in the news in a little TV, and they cant the angle and they turn the volume down. Those are kind of the things I like to think about, and that is I don't want these news articles to get my blood boiling too much, whether they happen to be on the political side of the issue or even the financial side of the issue. I want to stay away from them a little bit. And especially in these light volume markets, it's kind of easy to get wrapped up like on the CNBC or the, what is that, not TFNN, the CNN story today. There's just a completely made-up news story. Maybe they can get a few more people to shoot each other, but it's kind of sad at the same time. But there's always people that are going to want to try to manipulate you, try to cause trouble, and sometimes it's their political agenda. Sometimes it's just the bottom line to get people to watch their shows. I hope I don't do too much of that. But it is, Seeking Alpha. I want to thank everybody. There's a nice article from our Andy Heck there, and I posted the link in the den for it yesterday. But very interesting. But we've been talking about that probably for the last couple of weeks. He actually sat down and well thought it out. I've been thinking about it for a while. We kind of chat every once in a while about it. But it is interesting, and I've digressed to the beginning of this show. Also, when we were talking about at least a little bit of politics, somebody was talking to me last night about how funny it was that someone gets elected to be the president to get rid of wars, and they do nothing but come on. And I reminded him about how I was talking about how close this looks in history to 1930s, where Roosevelt was elected to stay out of the war. Basically said it didn't matter whether all of Europe burned, he was going to stay out of it. And, of course, at the end of it, all he did was let Hitler rise to the level of power that could really be a problem for us. And I thought of this quote out here, and I thought I would pass this along because it applies to trading too. And that is from Jean de La Fontaine. He was a kind of a big deal in the 17th century, kind of a poet, but had a lot of memorable quotes, even translated into English. But I always remembered this one, and it seemed like if we're talking about a current president or the one in the 1930s, a person often meets his destiny on the road he took to avoid it. And doesn't it just seem like that always happens? If you try to avoid something, it just comes back and puts itself in your place right in front of you where you can't avoid it. And just a little thought out there. Yesterday we had a phone call about Sky Mobile. MOBI is the symbol on it. I went and started digging into this company a little bit. And it is a cloud services company that basically tries to sell a ecosystem for cell users in China. And one of this always brings back the same problem I have with any of these Chinese companies. One, the books are fairly opaque. You can't really find out. Two, the reporting is opaque, and you really can't find out what these guys did. The one thing I really did want to find out about was Sky Mobile, or Mobile, was if they were dealing with a Xiaomi, which is, I think, XIAOME, which is the huge, after just 2 years, mobile phone company that basically kicking Samsung's rear end pretty badly in China, and also Apple's. And kind of interesting to see. We've talked about the issues about in China, which is they have a lot of 3G, but not too much 4G, and most people don't use a lot of 3G or 4G anyway. But they run the kind of the App Store, which is like the Play Store for Android folks. But I guess we're running out of time in the segment. When we come back, we'll talk a little bit about this, a little bit more anyway.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And anyway, we're talking about Sky Mobley, which is the Chinese Republic of China. And it is an interesting company in that they are like a Play Store or anything else, or the App Store for Apple in China. But they are going up against various companies in China also. It's kind of real hard to figure out what's going on over there. The reporting is not always great on Chinese companies. And one of the problems I have with investing in any Chinese company right now is knowing that if you say anything they don't like, they just kick you out of the country. If you're a foreign journalist, if you're a Chinese journalist, they take you out and you're never seen again. So, you know, depending on who's being paid off and where the corruption goes, you may or may not know anything until way too late in a company like this. You may wake up and find out that they're bankrupt. I think that eventually that's what's going to happen. It's probably not going to be, at least the Chinese stock market, probably not going to be appreciably different than our 1920s, where everybody ran stocks up and there was no real bookkeeping. And, of course, we didn't see things come out until many years later. And, going to just, I tell you what, I'm going to take a pass on this one. I can't find news. I do find a lot of things that says that they and Xiaomi are in a war of at least words. And that doesn't bode well for this company. So for the caller yesterday, I'm going to say I would pass on it just because there isn't enough decent reporting and or independent reporting about what's going on with the company. And the few things I could find were not positive about it. What did I get back here? I want to talk about, we were talking about parallels in the Chinese stock market that's now just becoming a full-blown animal out here. And we didn't start off with our history. I kind of bypassed. I want to talk about that because in 1935 today, the Public Utility Holding Company Act becomes federal law, breaking up well-financed utility pyramids that had been one of the main tools by which Wall Street had sheared and fleeced the investing public in the 1920s. By 1929, utilities were the largest market sector at 18% of the total U.S. capitalization, while utility revenues were, this is 1920s. Nobody had a bunch of computers hooked in or electric heat. They had some light bulbs for the most part, and that was it. You heated your house with coal or wood or maybe heating oil, but electricity wasn't used for all that much stuff. The bills were rather small, and the utilities were, of course, even then publicly regulated. But Wall Street had egged Main Street into bidding these stocks up to absurd levels. Utility stocks have never regained that illusion of grandeur. But that act came out in 1935, getting rid of some of the problems that our market had. My guess is that the Chinese market will be no different, that we will see a great deal of change. What else do we have going on? We were talking about news out here. It's starting to get rather silly. Saw an article today that was basically what I thought it was going to be, and that it didn't really change anybody's views. Let me pop it up real quick here, though, just so I can make sure that nothing else did happen. Anyway, there was a article out about Tesla and their new batteries. It seemed so self-serving and such a blowhardy article. If it was true, Tesla would be worth $1,000 today, and it's up 82 cents. But I'm starting to see what is gotten to be almost ludicrous. I kind of pieced this together from various comments I found around the web today about it. Tim Cook and Jeff Bezos were sitting around ordering a drone-delivered 3D printing machine from Amazon to make Chipotle burritos and paying for it with bitcoins made from a virtual entangled Higgs boson particle wrapped in dark matter. And basically, the whole gist of this was a comment from the CEO of Tesla saying that he could make batteries that had twice the capacity that we had today, but it's going to take a while, and don't look for these batteries anytime in the near future. And we're not going to be making our new plant make these batteries, but, it could be, these things are very, very close. And I knew it was bovine excrement, and a lot of it flying around this week. But the hyperbole for those people in Lutz, really flying at least around in the tech industry this week. Anyway, we'll talk a little bit more about this and some of the stocks that have been moving.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I had a request from the den. Of course, you can call up at 877-927-6648 and ask me your question on air. You can also email me at path@tfnn.com or, like one of the members of the den, ask me to look at it. So post a message in the den if you have anything else you want to look at. I can't even say it. Macor Technologies, I guess, AMKOR. Who knows how it's pronounced? Anyway, I'm familiar with these companies. I've just never had to pronounce the name. They're big at making a lot of the peripherals that go around making Amcor. Could be. A lot of the peripherals that go into manufacturing integrated circuits and printed circuit boards. We talked a little while ago about what a clear signal that the semiconductors had made a month ago, 6 weeks ago, and looked extremely weak. This kind of looks like it's doing a ABC. The one I would use out here is the July 14th as the A point at 1165, the August 8th low at 860 for the B point. And if today is the C point out here, which would not be it wouldn't be beyond the scope of things. We've basically done a 60% retracement. What I would say is that a lot of times these ABC downs will kind of line up with things like gaps, and I would use this one other than the larger one that starts at 1275, just for the reason that a 1-to-1 ABC is going to line up to the gap of April 29th, where this thing gapped up at 5.7, 5.8 million shares. And you've got some light volume, but you're probably going to drift back down to this area. And if you do on light volume, that would be a good buy and a good time to probably put on a long if the volume is light. You have a trading range then that would set up from 735 in that gap to $12.27. The semiconductor business right now is extremely narrow. They're selling a lot of components for very, very few devices. People are buying televisions, HD televisions, and they are buying sound bars for those, and they are buying smartphones. And if we go back and look at Best Buy today, that's probably a good indication. Industrially, not seeing that much difference in what's happening in that market. We'll look at Best Buy in a second. But to me, that would be the setup. It matches the gap. And most of the time, if you've got several things working for you that all line up, that's probably a pretty good indication that that's where that stock wants to go to. If you did want to use the bigger ABC out here that starts at 1227, let's see if I can make it work there. That would be a 50% retrace here today, but would take you to 673, and of course through that super high volume gap up from April 29th. So I'm pretty much thinking we're going to use that lower 1165 movement up here to look and set up that ABC. So just a thought. Hopefully that does everybody some good. But SMHs, let's go to Best Buy first. Best Buy have been kind of moving around this area for a while. Of course, it just got hammered. One of these shorts that I just knew was going to fall apart, but because of the high short interest, couldn't really play it in any of the newsletters. But it was pretty apparent that this thing was going to blow up right after the first year. They've done everything. They lied out their rear end all through the fall to try to get the stock price up. We saw, I think, insiders selling on it, if I remember right. It gapped down with monstrous volume, and that volume was 85.2 million shares. First time it tried to get back into this gap, it got as high as 32.24. Of course, yesterday it was right into that candle with very little or no volume. Down today, and volume is picking up. My guess is that we're probably going to at least get back into this low candle from the 17th of January that had 60 million shares. And the low of that day was, what was it, $24.24. I think probably good indication of the next few weeks, probably going to be very weak. The earnings call on this morning, pretty horrific. That's probably the best thing I can say. Yeah. Oh, thanks. Somebody in the den qualified. I thought my memory's starting to go, but occasionally I still remember stuff. I remember all the insiders selling at the same time, but they basically, the original founder couldn't get this thing bought out, so he basically pushed on them to lie all the way through the fall when things were horrifically bad. They continue to run a great deal of ads and sell a lot of product, very low margin. Normally, these consumer electronic retailers like Best Buy, you need something new out there in the marketplace. I thought maybe that would be the Xbox One, and maybe it'll be that this fall. But normally there's one or two products that really starts bringing people in and selling stuff at the store. And it hasn't been. Now, they will probably start picking up as the Apple business picks up. And at that point, after the top of the Apple market, probably right after the first of the year, my guess is that we're probably going to see this thing back in the 21, 22 area. And you may not, even with the bad news today, I think investors over the next couple of weeks are probably going to look past it. And that September 9th rollout of Apple's product and probably the delivery somewhere in October will be enough to keep sales up and keep the stock price up until after the year. That's if the entire market does not fall off the edge of the world, which is a possibility with the slight volume. Another company out here with good earnings is Designer Shoe Warehouse, DSW. And that is, went right up and filled this huge gap down that had monstrous volume on the 28th of May. Basically 30 million shares, got into it with 5.8 million shares, went right up to the edge of that gap, and guess what? Everybody just unloaded all the trapped rats from that May 27th close that woke up to a disaster on the 28th of May with that monstrous volume. If they've held through, are now just great that they didn't lose even more money. But that's what happens normally when you get back and fill these gaps, is that all the trapped rats can't wait to get out, and probably what we saw today in Designer Shoe Warehouse. The other thing is you just don't have that kind of volume, 5.8 million shares to that huge gap down with 30 million shares. Give you a good indication that even why this thing probably, and a great deal of people probably ran the shorts this morning, I would look for this thing probably to drift back down to $28 in the near future. PNIC, which is Premier Incorporated. I'm trying to remember what the news on that. Again, you can give me a call at 877-927-6648. Why I look at the news on PINC, P-I-N-C. Where's that little devil at? I had it on my list here. Beat EPSs by a penny on revenues, announced the acquisition of another company for, basically $50 million in cash. Nice little pop out here. It's still in this lower trading range, and it's not a high volume stock, but one of the few things moving out here today. PSEC is another one that is kind of moving out here today. It missed EPSs by 7 cents, missed on revenues 2, and looks to me like there's a high volume low out here at $9.17. That probably is going to be tested sooner rather than later. This is Prospect Capital Corporation, PSEC. But a lot of these still need lower tests. This one has been one of these stocks now that's in second day of a huge sell-off. Kind of weird to see Kuaihu or any of these Chinese companies looking so weak. The thought, though, is that Kuaihu is going to go up against Alibaba, and Alibaba is going to get $40 billion, $30 or $40 billion here in the next coming month with their IPO, and it's going to be extremely hard for Kuaihu to actually compete against them. They were down another 2.5 cents, downgraded from neutral to outperform from Credit Suisse, and company plans to invest more money in mobile internet, according to reports, and nobody likes anything, of course, after the horrible earnings call from yesterday, down on monstrous volume of 12.8 million shares. It does have a decent low out here. It's $74.10 for May 7th. That's never really been tested, and a gap that goes back a ways. See if we can go back here and pull this, which has been acting as support. That was the huge update that we saw. When is that? August 26th of 2013, this thing gapped up with 7 million shares, let's call it that. Came into there with 6.4 million shares. Pretty good indication that wasn't light enough that it's not going to ever come back and test that 74.10. But that's where I'd be looking at this thing if you thought long. If you're thinking short, it probably gives you about $15 down. If this thing could go back up and bounce into this gap down with heavy volume, maybe $88, $89, maybe during the Alibaba IPO, get up there with light volume, that may be a good place to pull the trigger on that for that move back down to $74. Sanderson Farms, SAFM is a symbol on that one. What else do we have? Sanderson Farms. What is this? SAFM. Look at my list down here. Missed EPS by 56 cents. I think there were a bunch of other stuff going on. Reported revenues in lines, but there were a bunch of one-time things. But, of course, no one liked this one. And kind of interesting, maybe Andy Heck will talk about it later. But, this is the same business that Tyson's in with chicken. But these guys did horrible. And I'm not exactly sure why. I've been digging into it this morning. Still not getting an answer that really makes a lot of sense to me. But certainly blowing through a lot of these lows on lighter volume. But big chicken, Tyson kind of manufacturing retailer of chicken. And let's see, let's look at the profile. Maybe there's something in here that makes me think. Poultry processing produces, processes, markets, and distributes fresh, frozen, and prepared chicken products in the United States. Prepared chicken products include institutional, consumer packed, and partially cooked. It's just hard for me to see a great deal out here. Maybe there's some new headlines out here that weren't clicking earlier. Missed forecasts. Profits disappoint. Earnings release. Kind of hard to find out. How can you go wrong on chicken? How can you really be that far off on the prediction? Company said chicken prices remained historically high during the quarter because of strong demand from retail grocery. The average estimated price, company posted revenues. I guess they just had a bad quarter. Kind of hard to figure out, though, how you have such a bad quarter in a chicken business. Last time I looked, no one was stopped eating chicken. But what can I say? The last stock in the movers out here is Tim Hortons. Probably a fairly good discussion of this is warranted. Rooster infertility. Are you kidding? That's what it is? The roosters need a little Viagra? What's going on there? Okay. It is true. Thank you. But I didn't look through all the news, never could find it. Tim Hortons out here. Now he's got me all worried about the chickens and the roosters. Mr. Rooster's not doing his job. Tim Hortons. I wonder if that's going to do much for Tyson's. We'll have to look at them probably after the break. I'll look up their symbol. Tim Hortons gapping up yet again today. And, of course, this brings back a huge thing that we've talked about many times. Of course, now that we know that Buffett's involved and behind all this, he's always the one who running around saying that people should be paying more taxes. And, of course, he's knee-deep in every one of these deals to pay less taxes or avoid the taxes that the government says that he's owned. So the hypocrisy is so thick you could cut it with a butter knife. But what can you say? Anyway, Tim Hortons, the big donut company, second day of Burger King actually buying them. Caught a lot of people on the wrong side of this, probably because Tim Hortons had been going sideways for so long at this $55 level. A lot of people thought it was going to break the other way. I think it's just a great deal of it, but probably not going to be able to talk this one down anytime soon. But it is interesting nonetheless for the hypocrisy from Buffett on the deal. And just catching a lot of people in light volume in a market that maybe you shouldn't be that heavily short of a stock like Hortons. Anyway, we'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, kind of an interesting move out here today in a lot of these stocks. But, of course, up 4.5 points on the S&P cash, just a shy of 1.7 billion shares. So going to be another light volume day, but nothing major happens. Probably going to close over 2,000 on the S&P cash, and I imagine kind of goes sideways out here through the rest of the week. I don't imagine that we're going to have a great deal higher, but I don't think no one's going to pull the rug going into the weekend without some major shooting and maybe some nukes going off. Certainly looks like a very apathetic market, though, and quiet market. Of course, they say don't be short a quiet market. My belief is that it's going to take maybe a week to 10 days after we come back from the 3-day weekend to get fired up. I instant messaged Andy Heck, who will be on at 5 today, about this whole thing with rooster infertility and chickens. And he says, I asked him about Tyson. He said, maybe they will be a little bit down on it, but they're very diversified and control many of the markets they're in. I don't worry about Tyson. They're the 800-pound gorilla. But I'm sure he'll expand on his show on it today. And, of course, directly after this show on most of TFNN.com is Tom O'Brien. And he'll be talking a little bit more about that, also that part of us moving out here. But volatility really moving down when we look at the VIX. Solidly back under 12 at $11.60. Dollar index up another 10 cents, which is also problematic for the market moving much higher. But we've looked at pretty much all the earnings to see if we've got enough time to look at a couple of the stocks that interest me and see how these things are moving. Watching very closely Advanced Auto Parts. They have a high out here, tested on very light volume. Earnings wasn't that far or that long ago. They've got their next earnings call is November 6th, so you've got a few months on it. But tough for me to see a lot of these stocks going much higher when you test volume this low. Now, maybe volume comes back in the first week of September. But right now, that doesn't look very good. But we've got a lot of these stocks setting up just like Advanced Auto Parts, and that is the June 30th high out here, 136.12 with 1.4 million shares in the last 2 days. 432,000, 272,000. Like I said, I probably wouldn't be shorting these going into Friday, but I would watch these things. And if they do come back with very light volume, it's not unheard of for these 3-day weekends to see a big change in the market character. My guess, though, is it's probably going to take a little bit more than a day, and that Tuesday after we come back from the 3-day weekend to bust a lot of these stocks. We're probably going to have to see something more. I see a great deal of this, and somebody that asked me about Amcor earlier, see the same thing in a lot of these semiconductor stocks. KLA 10 Core, of course, which makes a lot of products also for that sector in the semiconductor space, making fairly decent highs out here on lighter volume. The June 10th high, $75.40 with 4 million shares. And, of course, we're doing 800,000 so far today. So let's say we do 1 million. You're going to come in about 25% of the previous high out here. Don't really worry about the stock going that much higher, but look for shorts to kind of try to exit staged left before this weekend. And, of course, that does leave the market kind of open to downside, and especially in September where you might not have a lot of volume coming in, and without a lot of shorts to buy it, you can get that big surprise. So we're going to keep an eye on that. But even Lazard, some of these others I have here, even O'Reilly Auto Parts, look at the light volume up here at these highs. Kind of troubling. Anyway, we'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.